Poloniex is a well-known cryptocurrency exchange for retail investors, but one that has started to struggle since some 200 new exchanges entered the market. Regardless, the platform prides itself on its healthy selection of digital assets and a bunch of great features. But what does it offer that others can't? Join CoinScan as we take a deep dive and find out. Poloniex was founded in Delaware, USA in January 2014, making it one of the early exchanges to enter the scene. Things didn't start well for the fledgling company, and it almost immediately suffered a high-profile hack shortly after its launch and lost approximately 12% of its Bitcoin, which was worth approximately $50,000 at the time. Poloniex' reputation began to improve by 2018 when social payment company Circle paid some $400 million to acquire it, with the aim of turning it into America's first fully regulated cryptocurrency exchange. In order to become regulatory compliant, the exchange then delisted nearly half of its crypto assets that could be classified as securities and instituted strict KYC checks. This was praised by some users but criticised by others, who preferred its previous range of options. Poloniex also then created a platform for over-the-counter cryptocurrency trading and payments for hedge funds and large banks such as JP Morgan and Goldman Sachs, which proved a great move, generating over $2 billion monthly volume for the exchange. Soon afterwards, the company created Circle Research, which offers in-depth cryptocurrency market analysis as well as how-to tutorials to aid traders of all skill levels, a nice added touch. In 2019, the exchange faced difficulties due to the uncertainty in the cryptocurrency regulatory environment in the United States. As a result, it has continued to reduce the number of coins available to US crypto investors. To combat this, Poloniex was spun off by Circle in November 2019 as a separate entity, Polo Digital Assets Limited, backed by an unnamed group of Asian investors that included Tron CEO Justin Sun. The newly formed company was registered in the Seychelles, a remote location known for crypto-friendly regulations. Under new leadership, Poloniex changed course and abandoned forced AML KYC checks, making it possible to trade on the platform without verification once more. Furthermore, they added new trade features but revoked trading access for US customers, implying that it abandoned the idea of becoming a fully regulated exchange. All in all, it has been a turbulent few years for the exchange from its inception to now, but its purchase by Circle saved it from obscurity and has helped keep it somewhat relevant to this day. Poloniex is well designed, with a user-friendly trading screen and the trading platform's interface providing a comprehensive view of all the 200 plus cryptocurrency pairs that are currently available for trading. The exchange also offers a healthy selection of cryptos, with some being higher on the risk scale due to their lower market caps, but representing unique investment opportunities for astute traders. Users also get full access to services on both mobile and desktop sites, including hedging and leverage trading. Unfortunately, as of writing, US citizens and residents still can't use this exchange, which is a big loss for the company due to the country's keen interest in digital assets, but unsurprising due to the government's notoriously complex financial laws and red tape. Still, citizens of other countries, apart from those on the FCA ban list, can freely use the site with no issues. Poloniex fees for taker and maker trades are 0.155% if the user's trading volume is less than $50,000 in a 30-day period. Fees can be reduced if they pay with Tron, and providing they have over $49 of the asset in their account, they'll be eligible for a lower fee tier. Poloniex fee structure also varies depending on the user's 30-day trade volume and their respective verification tier. Traders will pay a minimum of 0.07% per trade if they have a verified account, depending on the cryptocurrency, and paying in Tron gives users a 30% discount. For full details on fees, check the main article, which has extra info and a handy link. Poloniex employs a number of security measures, such as an anti-money laundering system and an effective internal risk control process that involves full investigations by actual humans in response to any suspicious behaviour. Poloniex has also apparently formed partnerships with relevant institutions in order to reduce crime, return stolen funds, and protect others in the industry. That said, it is currently impossible to fully assess Poloniex security without joining the site as a user, because the exchange isn't completely transparent about all the safeguards it provides. Its website lacks a dedicated security page, and it does not specify how much cryptocurrency it keeps in cold storage or whether it has any type of insurance. All it provides is an FAQ section that highlights the importance of two-factor authentication and freezing an account if suspicious behaviour is suspected. The exchange primarily provides customer service via email, in which users can open a customer support ticket by completing a simple contact form. The exchange also includes a help section with frequently asked questions. However, users have reported slow response times and inadequate responses to issues. There is also no phone support, but this is a pretty common omission for most exchanges for some inexplicable reason, so it's just par for the course. Overall, users might prefer an exchange with more customer support options. When it comes to DeFi and cryptocurrency, scandal and controversy is always an unfortunate part of the conversation, and in this respect, Poloniex sadly doesn't come up smelling of roses. As mentioned, in March 2014, hackers stole 97 Bitcoin from Poloniex, accounting for just over 12% of the exchange's supply. To raise funds, it temporarily reduced customer balances by 12% and increased trade fees. Customers were fully repaid by July of that year. The Tron connection doesn't help either. Justin Sun, the founder of Tron, is one of the investors in the group that purchased Poloniex. According to a 2022 report, Sun has significant control over Poloniex and once instructed employees to fake the KYC identity verification process to increase user adoption, which, if true, is extremely shady behaviour. Furthermore, according to the same report, Sun directed Poloniex engineers to search for Bitcoin that customers had mistakenly deposited into the wrong type of crypto wallet over the years. 230 Bitcoin were transferred from the old crypto wallets to the Poloniex communal wallets, and no one knows what happened to those funds after. Poloniex has also been in trouble with US securities regulators. In August 2021, the SEC charged Poloniex with operating an unregistered digital asset exchange, and Poloniex paid more than $10 million to settle with the SEC. While Poloniex issues may have been resolved, this is yet another red flag. One of the main issues is also that the exchange is not a regulated trading platform, and to comply with US securities regulation, it withdrew its margin and lending products for US customers in 2018. All in all, there has been a lot of shade thrown at the exchange, and it's easy to see why. While some of it can be considered speculative with no actual proof, it certainly doesn't paint the site in the best light. Poloniex has had a turbulent few years, but it appears that the exchange is now ready to stabilise and reclaim its user base, so it may well be worth checking out. I'm Stuart, aka The Wordsmith, on behalf of CoinScan.